Hey guys, Martin here. So today I have this day trading strategy which I'm going to backtest for you over 100 trades. I will tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest for you. This strategy involves two trading indicators, the acceleration bands and the exponential moving average. The acceleration bands indicator serves as a trading envelope factors in a trading instruments or stocks typical volatility over standard settings of 20 or 80 bars. So they can be used across any time period, though it's often recommended to use them mostly across weekly and monthly time frames as breakout indicators. So using the shorter time frames can define likely support and resistance levels at the lower and upper acceleration bands. So these bands are plotted around a simple moving average as the midpoint, and the upper and lower bands are of equal distance from the midpoint. This indicator possesses three formulas. For the upper band, it is the average of the last 20 bars and the highest price of the current bar plus 4 times the highest price times the highest minus the lowest prices divided by the highest plus the lowest prices of the current bar. The middle band is a simple moving average of the last 20 bars, and similarly for the lowest bar, it is the average of the last 20 bars and the lowest price of the current bar minus 4 times the lowest price times the highest minus the lowest prices divided by the highest plus the lowest prices of the current bar. An exponential moving average, also known as EMA, is a type of moving average that places a greater weight of significance on the most recent data points. So this backtest is based on the 1 minute time frame with a 1:5 risk reward ratio. So essentially, every $1 that we risk, we aim to make $5. And just as a note, this strategy is offline, which means I'll go back in time on the charts to test this strategy and see how it would have performed. So therefore, it does not take into account, commissions or even the spread. If you don't know what that means, the spread is the difference between the bid price and the ask price. At any given time, you can buy or sell any instrument. Usually, the broker's commission is the difference between the price at which you will buy the asset, which is called the ask price, and the price at which you will sell the asset, which is called the bid price. Alright, so let's get on the charts now, so I can show you a few examples of the strategy, and then I'll perform the 100 trade backtest. So the strategy is as follows. We go long when the EMAs are bullish, which means the 50 EMA is above the 200 EMA. The price closes above the 200 EMA, as well as above the acceleration band's middle band. Similarly, we go short when the EMAs are bearish, which means the 50 EMA is below the 200 EMA. The price closes below the 200 EMA, as well as below the acceleration band's middle band. The second rule is we place the stop loss at the last swing. The third rule is we can only have a maximum of 2 trades at all times, and they can only be one long and one short. The fourth rule is we move the stop loss to break even as soon as the profit equals the maximum risk we are taking per trade. And the fifth rule is that we have a 1:5 risk to reward ratio, which means that every time we risk $1, we aim to make $5. So here we are on the Euro GBP chart, the 1 minute time frame. We're going to add the acceleration bands and the exponential moving averages. So acceleration bands then you can choose the exponential moving averages. I'm going to add 2 of them. And then right here, I'll just change some of the visual settings. So I'm not going to change the default settings, the default inputs, but I'm going to change the colors just because I feel like it's easier to see like this. And I'm going to change it to yellow. And more importantly, for the EMAs, I like to have it as red for the 50 EMA. And I'm going to change the thickness. And in the inputs, I'm obviously going to put 50 and change the method of smoothing from SMA, simple moving average, to EMA. Same for the 200 exponential moving average. Gonna put a light blue in the same thickness. All right, so you can clearly see the 2 bands, the upper band here and the lower band here, the middle band in gold here, and then you've got the 2 EMAs crossing right here. So I'll show you a few examples and then we'll dive into the backtest. So here's a couple of examples. You can see the moving averages are bullish. So the 50 EMA is above the 200 EMA. The price is above the 200 EMA. And right here, it closes above the middle band of the acceleration bands. So we enter a trade. Last swing is right here. It's got a 1-to-5 risk-reward ratio. You take profit up here. Similarly here, it goes below the middle band. It crosses above, and then you've got the last swing here. So you put your stop loss right here, and then you aim for 5 of profit, and you get hit here. So here's a couple of examples of short trades. So as you can see, the EMAs are bearish. The red line is below the blue line. The price here crossed the middle band upward and then came back, crossed it downward. The price has to close below the 200 EMA, so the blue line, and below the middle band, which is the gold line. So we take a short right here. We place the stop loss at the last swing, which is here, and we aim for a 1-to-5 risk-reward ratio. In this case, it ends up in a loss. However, next time it crosses the middle band, the EMAs are still bearish. It crosses the middle band here, so we take a short right here. We put the stop loss at the last swing, which is right here, and we aim for a 1-to-5 risk-reward ratio, which gets hit right here. So 2 trades, 1 loss and 1 win. So you're up by 4. So now let's go ahead with the 100 trade backtest, and I'll see you for the results. here you go, guys, the results. So we had a maximum drawdown of 19%. We risked 5% per trade, with obviously a risk to reward ratio of 1 to 5. We had 25 wins and 75 losses, with 2 wins in a row and a maximum of 23 losses in a row. That gives a win rate of 25%, and the duration lasted for 79 days. So the total profit is pretty insane. It's 1,728.5%. So essentially, if you had started with $10,000, you would have ended with $172,854. So that's pretty amazing. The drawdown is relatively low. That was basically due to the fact that we were moving the stop loss to break even. We had a lot of losses that were recovered. The profits were recovered from, moving the stop loss to break even. So that's a pretty good way of managing your losing trade. So there you go, guys, the 100 trade back test. Let me know what you guys think, and I'll catch you in the next video.